Hey y'all, it's Mo Brown. Welcome to the Mo Show. It's the 6th episode and very excited about the guests that we have here tonight. I say it all the time, we got to be able to collaborate with private and public in order to get this country moving forward in the right way. Today, we have a man that can speak directly how we can do that. His name is Barry Ritholtz. He's the co-founder and chairman and chief investment officer of the Ritholtz Wealth Management LLC. He has been a frequent critic of the access of Wall Street, named as one of the 15 most important economic journalists in the United States. He has been called one of the 25 most dangerous people in the financial media. So I'm very excited to have Barry on tonight. Barry, how you doing?
Pretty good. How about yourself, Mo?
I'm doing excellent. And I'm really excited to have this talk with you. And it's kind of interesting how we was able to connect. I saw an article that you wrote in Bloomberg, in which you frequently put your opinions there, and it was talking about we need more than a bailout, and that really grabbed my attention because I think the same way you think. Like, we got to have very innovative thinking to redefine our country and take it to the next iteration of who we are as a country. And while we're in a crisis, we do have a great opportunity to see what the future is going to be and be more reflective of our country. So we're going to jump into that today, and we're going to get your expert insight on a lot of subjects here. But before we get into that, I love to know, who is Barry? I ask all my guests that question, and I just want to know what's your whys and who you are and what gets you up in the morning and gets you going.
What do your other guests say to the question, who is Barry? First, I love the name The Mo Show. I think that's great. Okay. I'm kind of a person who's been working in finance, working on Wall Street for, is it 30 years already? God, that's a long time. And, I didn't take the normal route into finance. Most people in my world go for a master's in business administration, and then they work in a sales job at some big firm, and that's the slog they go through. I took a completely different route. I was a board attorney. I had some clients who were in finance, and I got a tour of this is in the 90s, a tour of a trading room, and I just kind of fell in love with the action and thought it was really interesting. And as a person working in that space, I quickly figured out, hey, this isn't what it pretends to be. This is something very different. Everybody's telling stories back and forth. Half of those stories are nonsense. And most of the people who are telling nonsense don't realize it's nonsense. Right. It's not that everybody in finance is fraudulent. Yeah. They just don't know. There's a small percentage that are pretty fraudulent. And when you get guys like Bernie Madoff, they make up for everybody else. But it became a process, almost a game, to figure out what was real, what was fake, what do we understand as people going through cognitive processing, trying to separate fact from fiction. And it turned out that humans in general are terrible at this. So I'm probably best known for, I wrote the book Bailout Nation, which explained why the financial crisis happened. The reason I wrote that book was mostly because a publishing house asked me to. I was one of the few people warning about the pending collapse in real estate, in finance, in derivatives, in subprime mortgages. If you were looking in the right place, it was all very obvious. If you were not in that exact right angle and looking in, it just looked like a normal cycle, and suddenly everything fell apart. So that's probably what I'm best known for. My firm, I work with 32 fellow employees. We manage about $1.3 billion for over 1,000 families across the country. It sounds like a lot of money, but in my business, it's not a lot of money. There are lots of 50 and 100 billion, and now we have Vanguard runs $5 trillion and BlackRock runs $6 trillion. So $1 billion is almost pocket change in that area. And I've been writing about markets and the economy for well over 20 years, and having a different attitude, having a different approach. I kind of call it as I see it and let the chips fall where they may. And I'm not afraid to call people out and say, this is nonsense, you're wrong, and here's why. Right. So that's kind of been my reputation over the past, I don't know, decade or so.
Okay. Well, I mean, that's all great stuff. And, that's what attracted me to you once I started looking into who you are and what you have done. Just your nonsensical approach to, your nonsense approach to having these conversations around finance and what we need to do as a country. I think as we currently sit and look at all the challenges we have in front of us right now and then ahead as we move forward, having thought leaders like yourself guiding and leading that conversation is so important. So it's great that you gave us that background and what drives you, and it's good insight for us to look at. And I encourage people to get your book too, The Bailout Nation, and get a good sense of who were thinking about the things that we needed to during that tough time and how we can utilize your knowledge as we move forward too. So I'm going to segue into the second question I have directly towards the economic and health crisis that we find ourselves in right now. Can you shed a little light on what we should glean from the past crisis, as you alluded to in your book, to fight this COVID right now?
Sure. Well, two very different crises caused by very different things. And the solutions are not as different as you would imagine, given how completely different the sources are. The original financial crisis in 08-09 had a lot of different factors. Many different things went into it. A lot of people like to point that was the cause. It was no one single thing. There were a lot of things that took place. We had a long bull market that ended in 2000 that sent people looking for other forms of investment. Real estate turned out to be one of those things. We had very low rates in response to the September 11th attacks. We had 2 decades of financial deregulation, pretty radical deregulation. That and a whole lot of other factors all added up to a situation where it became a very challenging setup where it didn't take much to blow everything up. So when you have radical deregulation and very low rates as primary causes, well, re-regulation, the pendulum shouldn't swing so far one way without coming back the other, is one of the things you can do. And we've done some of that. We've increased the regulation on banks. We've improved their capital requirements. We've done a bunch of things to make them more responsible, less reckless. We don't want capitalism for the poor, but socialism for the wealthy. We want everybody to have to play by the same rules. I would have gone further than we went in 2010 when all those new rules were put into place, 09 and 2010. But we did improve a lot of stuff. So things were a little safer, a little more stable than they were, let's say, in 06, 07. The current crisis, very different situation, didn't come from within finance. Right. It was like it's an externality. It's like a meteor hit the planet. Not quite as bad as the one that killed all the dinosaurs, but still pretty bad. Right. And so that requires a somewhat different response. The pandemic revealed a lot of things about our country that some people knew, but not everybody was really hip to. So, for example, we knew there were huge holes in the safety net. We knew that lots and lots of people, even with Obamacare, even with the ACA, still didn't have access to any sort of health care. And the last thing you want are people who might possibly be infected showing up to just get a swab in the emergency room. That's just terrible medicine, and that would make the pandemic much worse than it currently is. So the pandemic was a great reveal of that. That you have to have some form of medical. Any industrialized nation in the world, except the United States, there is at least a minimum level of medical care where if you think you might be contagious with a COVID-19 disease that could potentially kill your friends, family, and neighbors, you should be able to go get a test. That shouldn't be like a controversial thing. So a lot of the things that need to be updated is really just the United States catching up with the rest of the world with basic safety net things. The bigger economic issue, and not that healthcare is a small economic issue, but it's this big. The bigger economic issue is, hey, you have 39 million people unemployed as of, May 26, 2020. Depending on which economist you want to believe, somewhere between 40 and 50% of those jobs are gone. Those people, when this is over, are not going to be able to just go back to work. That's a big deal. That's a really big deal. If you think about the Great Depression in the 20s and 30s, 1929 into the 30s, we had a 25% unemployment rate. We probably passed that last week. And when we get the latest data in the first week in June, we're probably looking somewhere between 24 and 28%. These are Great Depression era numbers. That's the bad news. The good news is, once we have some sort of a treatment, once we have some sort of a vaccine, the economy will start to recover normally. This is not a cyclical recession. This is an externality, comes out of left field. But like I said earlier, it's very revealing. I think we want to see things that are going to alleviate that unemployment. And one of the easiest ways to do that is to set up these public-private partnerships like the United States has done for most of its history. People seem to think that this is a radical proposal. Go back 300 years. The United States has always had a joint venture between the public sector and the private sector, whether it's railroads or patent protection for inventors, telegraph, radio, computers. You could go every generation, whatever the dominant technology is, there's some sort of enabling platform that the government and the private sector work on together. Even go to the 1950s, the interstate highway system that allowed nationwide travel and shipping and trucking and the rise of suburbia. That was a federal government program that the private sector then built on. I'm going to take a break there because I can talk about this forever. But that's the broad overview, is when the government and the private sector work together, they create a platform that allows new companies, new ideas, new businesses, new jobs to be created. And it's been very successful in America.
Absolutely. And we definitely want to get back to that, because I really do want to dive into that public-private partnership, and specifically some of the things that you recommended in that article that I read. Some interesting points, but we'll get back to that. But there's something else that you alluded to, was actually segue into my second question, was the fact that we may lose 40 to 50% of those small business jobs that we currently have right now. And I think about the minority community, obviously me being a minority myself, and the impact that disproportionately has infected the minority community. Can you speak on the rate of closures in the minority community comparison to white-owned businesses, and the consequences that may stem from that as well?
So let me just clarify the job loss. Of the 39 people who are currently unemployed due to the pandemic, 40 to 50% of those jobs may not come back. Okay. So that's what, but we're still talking, about 20 million jobs. That's a lot of jobs. So we've, it's still, this sounds crazy to say, it's still kind of early in the pandemic process. When you look at historical prior versions of this, really the only comparison we have is the Spanish flu, 1917, 1918. When that came back a second time, that's when most of the deaths happened. It was the second phase of it, not the first phase of it. So we're really just the tail end of phase one here, or maybe the seventh inning of phase one here. So it's hard to guess what this is going to look like going forward. And the reason I bring that up is the initial phase of this contagion, was in mostly big cities where there was a lot of density, where there were international airports, because on the West Coast it came in through China, but on the East Coast it came in through Europe. And so what ended up happening, cities like New York and DC were really deeply affected, whereas other cities more in the heartland, with much less international travel, weren't affected as much. Although if we look at some of the data that's out there, if we look at some of the tracking, you could see that this is now spread all across the country. And I just, let me just take a quick look at this while we chat.
Okay.
I just was looking at one of the data points that one of the COVID-19 tracking project just put out. Since a bunch of reopenings took place over the past few weeks, new infections on a weekly basis in South Carolina, the increase was 42%, in Alabama 28%, Missouri 27%, North Carolina 26%, Georgia 21% after a couple of weeks of declines. And so when we talk about, well, this started out in big dense cities in areas where African Americans and minorities tend to live and work, tend to be frontline workers, essential workers who are the ones most at risk, whether it's healthcare or teachers, fire, police, go down the list. A lot of the minority community were there early and exposed early before we really understood, hey, everybody has to have PPE if they're dealing with the public and in order to protect themselves. Masks and face shields, because it accesses your body, not just through your mouth or nose, but through your eyes. And it's not a coincidence that today the first responders in New York City have a lower infection rate than the general public. But we know that now. In the beginning, we did not know that. And so a lot of people who were in big cities where the infection was, especially New York, was so widespread and were frontline workers, they got infected pretty early. So now we see this is, as New York City has bent the curve, as some of the other areas, New Jersey and Connecticut, that were early infections are doing much better, the rest of the country has become a little complacent, and everybody ran out on Memorial Day weekend. And, Andrew Cuomo is fond of saying, tell me how people are behaving today, and I'll tell you what the infection rate is going to be in a week. Right. And given what we saw this weekend, it wouldn't be a surprise if we see these infection rates tick up again.
Yeah, well, I mean, that makes a lot of sense. And as I was looking at videos come in with the social gathering and, thinking about how we're reopening this country and that second spike because we're not doing our part as citizens to ensure that the health is intact. And, the old saying, health is wealth. Well, if you don't have any health, then the wealth don't even mean anything. So thus that statement. And hopefully we can get through that. But I do want to press you a little bit just on the minority and small business portion of this. Mm-hmm. If we can't get the small businesses back in place, the restaurants, the salons, the things that we call the community backspine, for all of us, what will that do to the American economy if we don't have a solid game plan to deal with that?
That would be devastating. Look, small businesses are the growth engine of the American job market. And every time you see a big company, they started out as a small company. Very few companies launch with 10,000 employees. In fact, just about none. And right. You could look at some of the big new companies that are out there. Look, Uber hasn't been around for 100 years. Uber is barely a decade old. Right. That launched, it was a handful of people. And you could name a company, especially some of the startup companies we see in Silicon Valley or any of the local companies. These are what drives most of the job. More Americans work in small businesses and local businesses than they do in the big publicly traded companies. That right. is really the key employer throughout the country. So it was a little disappointing to see how fast the first version of the payroll protection plan, how quickly we burned through all that money. I think everybody was very nervous early on in the crisis. When we seem to have gotten a little bit of a handle on everything, and I don't think we have a handle on it. America is 4% of the world's population. We're about 31% of the infections and 28% of the deaths. So we are not doing an especially great job when you look at that data. Right. But I think people feel a little more comfortable today than they did in the worst of it in March, because we seem to have, at least on the state level, we seem to be doing a little better job in the areas that first got infected. So the second version of PPP, the Payroll Protection Plan, was fully funded. They still have plenty of capital left if small businesses want to apply for that loan, which can be forgivable if you don't lay off anybody. That's the whole idea behind Paycheck Protection Plan. Right. Some of the states have been talking about that. And again, my frame of reference here in New York is Andrew Cuomo, who has done a really good job communicating every day with an update. Here's what the data says. Here's what we've learned. Here's what the infection rate looks like. They specifically, the state of New York specifically created their own version of the Payroll Protection Plan for New York. He's been very aggressive about trying to protect neighborhoods and peoples who are most at risk. He specifically pointed out we need to do a much better job at protecting minority communities, which are disproportionately being hit by this, not just from a healthcare basis, but also from a business perspective. And they're trying to create, I don't know if it's released yet or about to be released, a special version geared towards inner city payroll protection so that credit is available, loans are available for businesses so that they could stay in business. Imagine if you're a restaurant and you've been closed 3 months and you want to reopen, you don't have any inventory. You don't have anything to serve. If you're going to reopen safely, you're going to need some form of credit just to fill the refrigerators and freezers with food. And, no income for 2, 3, 4 months, that becomes hard to do. So we're making certain steps in the right direction, but it really needs to be a national policy.
Absolutely. Absolutely. That's very well said. And I'm glad you was able to shine some light on that. Now let's go back to the private and public partnership that we're speaking about. In your article, you listed 6 areas that we can focus on. 5 of them, which is what you normally think about, but the last one was very interesting. The 6 was climate remediation, sustainable energy, infrastructure, smart roads, digitized healthcare, and the last one being asteroid mining. Can you speak on all 6 of them, briefly, and
sure,
and with a little bit of interesting thoughts about
sure. And the funny thing about those, all of those are real things that exist in some form today. I'll start with the last one first because everybody seems to love the concept of asteroid mining. This is not a crazy way out there in space, no pun intended, idea. This is a legitimate issue. In fact, President Trump a month ago signed a treaty document that basically says nobody has exclusive rights to mine the moon. Anybody who get up there has access to, the thinking is the way the moon formed in a collision with Earth, and then reformed as 2 separate, a planet and its satellite. There are a lot of valuable minerals on the moon. Not too long ago, some astronomers found this asteroid in the asteroid belt, which is between Mars and Jupiter. And based on their analysis, this is a $1 trillion nugget of gold and platinum. So the idea that it's unthinkable that we'll be able to launch a rocket to an asteroid that using robotics can extract a few million or $1 billion worth of minerals and bring it back to the Earth. Listen, how insane was the idea of self-driving cars 10, 20, 30 years ago? Now it's a given self-driving cars are coming. What we could do to help those is instead of having them rely on visual perception and radar, we could use devices like RFID chips so that every car knows where every other car is. Not only do they see it, but they'll get a signal from it. You could do the same thing with intersections and on and off ramps and traffic lights and stop signs, so that if we were to have a set of standards where this is the standard that we all use, now every car knows where every other car is, and every car knows that's a stop sign, that's a red light. That again, this is all pretty standard stuff. We've done this with software. We come up with uniform standards so everybody's documents work with each other. Everybody's video, we can see each other no matter what our computer system is. This would just be a set of standards for the industry to build on and use. Infrastructure is that's the easy no-brainer one. Not only the usual stuff, things like roads, bridges, tunnels. Every year, the Civil Engineer Society does an analysis of the U.S. infrastructure. We typically get a D. Sometimes it's a D minus. Sometimes it's a D plus. But it's not an A. It's not a B. We once led the world with the greatest infrastructure there was. Everybody has leapfrogged us. And if you go to Asia or Europe, you're like shocked at how much nicer the bridges and roads and highways and airports, everything is just much nicer. By the way, part of our infrastructure is broadband. And when we look in rural communities outside of the big cities, lots of places don't have broadband. They can't even do a video like this, or if they can, it's very halting because they don't have the bandwidth for it. Look, we set up in the 1930s the rural electrification program because the private sector by itself said, hey, it's too expensive to string power lines to Mrs. Jones on the farm all the way in at the edge of wherever. But when the U.S. government says, hey, we know it's expensive for you to run a line to Mrs. Jones, but there's a million Mrs. Jones, and it's a lot cheaper if we're going to run a line to everybody. So let's work together and come up with a way to bring the cost down. And we ended up doing it. Not only does every person in America have access to electricity within, I think it was within a quarter mile. I don't remember the exact, but we also have access to postal delivery and it would be, and telephone. And it would be nice if we have access to broadband. That would help people who really could use it.
Yeah, and I think that's a very great point. I mean, that's something I think about all the time, given my district has a lot of rural areas in, the limitations they have for as not being able to do homework when they go home. There's mass students who goes to the local McDonald's that use the Wi-Fi to get their homework done, or, talking about availability of healthcare and being able to do digitized healthcare and go into those rural communities and have an opportunity to get good healthcare, quick diagnosis without having to travel 45 minutes. All those things can be somewhat alleviated with better broadband in these rural areas. And I think, going back to that private-public partnership and how the government must play a role in that. I think this is what we're trying to do right here between you and I. The minds think about this constantly and then bring the people who actually is going to put the policies on the table that can be voted on to really affect all the Americans throughout the country. Can you touch on how can we break through some of this political bickering? And maybe you don't have the answer here, but the importance for us to get back to that private and public and doing what you and I are doing right now to set policy.
So the old statement is all politics are local. Yep. And so even though we have a national election coming up in November, it really depends on how we vote locally. If we continue to send the same people back to Congress, we can't be surprised if we get the same results. Right. So I will say I am more optimistic that people have just had it up to here this election than they ever have in my lifetime. I know we've talked about change elections in the past, and people have said, well, this time this is really the most important election of your life. But it really feels like I know people who voted a specific way in 2016, and they were very frustrated by the outcome of the election. And I think they're going to be working hard this election. I also know people who were fairly happy with the outcome in 2016. And it seems like lots and lots of people are less thrilled with that initial result in 2016. And so if there was ever, and again, I'm not a political pundit, I'm not a political analyst, so you could take my views on this with a big grain of salt. But it certainly feels between the daily drumbeat in the news and just how crazy everything has gotten before the pandemic, and then this horrific COVID-19 and a very bungled response to it, at least on the federal level, it seems like people are really ready for change. And we'll find out it's almost June. So what do we have? Less than 6 months. Right. We'll find out if it's a momentary frustration or if people really want significant change.
Yeah, absolutely. And I think that's very well said. And we just got to really change the narrative and how we're communicating with each other. I see it all the time. And I have conversations with everyone. And the emotionalism that we have into politics, we got to adapt down that and really start being solution oriented. And, no matter what label that you're coming in the door with, the issues in front of us are way too serious to be getting caught up in the emotionalism of politics. And I get it's part of it, but we got to be more of adults right now and focus on the issues at hand. So definitely appreciate you giving us that perspective on that. And then we'll end with one last question, and then we'll get you to hang up, and I'll address everyone else. Is where should people be investing their money at right now? They're fortunate enough to have discretionary income.
So I never let the events of the day change the way I invest my dollars. I am a big believer that we should all own broad index funds. You want to be an investor in the United States as well as the rest of the global economy. A real easy way to do that is through the S&P 500 or through something like the Vanguard Total Market Fund. Very inexpensive. You don't have to worry about picking a stock or something going wrong with this or that company. You just pretty much own them all. Is a good approach. You can also own some Europe and some Asia. There are lots and lots of index funds that do that. If you are fairly I'm just shutting off this before it starts beeping. If you are older than 40-ish, I would say you want to have a little bond fund to go with that to offset the volatility of the stock market. And, there's lots and lots of good broad funds that do that. But the idea is that you should be thinking about investing for the next 20, 30, 40 years, put a little money away each paycheck, rebalance once a year so your portfolio stays in the risk band that you initially start with, and allow the beauty of compounding to continue to grow the value of your portfolio. I think that one of the things that we should be doing, but we haven't, is we should be making it easier for young people to invest. And we have an IRA. Not everybody has access to a 401k through their company. We should have some way so that people whose firms don't offer 401k have an access to a pool where they can invest like that in a tax-deferred way. You could do an individual retirement account, but it's a much smaller dollar amount that you're allowed to contribute under normal circumstances than something like a 401k. I want to see us create the set of circumstances where people are thinking not about today, not about now, not about tomorrow, but thinking long term. And when Americans think long term, we invest in ourselves, we invest in our country, we build bridges and roads, we expand electricity to everybody in the country. We could do the same thing with broadband. And I want to see everybody who's a student have the ability to not stress about having either an emergency fund or having money saved for retirement. That would be just a great set of circumstances for everybody.
Absolutely. That's what I call increasing the pie. And if we can increase the pie more and more and more for more Americans, that means that we're all going to have an opportunity to achieve our version of the American dream. And ultimately, that's what it's all about. And so that is great advice. And I hope people heed it and start doing some of those things on their personal finances if they're capable. And where they're not capable, the suggestions that you pushed out, as a potential congressperson, those are things that I can help push through from my end. And I look forward to working with you as we move forward. And so anything you want to plug here before we sign off? Definitely appreciate you.
What do I want to plug? Masters in Business, my weekly podcast. I speak to different people in finance and business and academia, talking about what they're doing. This week I spoke to Michael Lewis, who wrote Moneyball and The Big Short, and his most recent book was The Fifth Risk, all about the Trump transition team, which was really quite a fascinating read. He was 3 years ahead of the pandemic, warning, hey, something is potentially going wrong here. So the timing of this was really interesting. You can find that iTunes, Stitcher, Spotify, wherever finer podcasts are sold.
Awesome. Well, again, thank you for coming on and shedding such great information. This is a conversation that I hope we can continue, not only with you and I, but all across America as we look to get through this pandemic and reform and transform our country moving forward. So, Barry, I want to say thank you for coming on again, and we'll talk here soon. Thanks, man.
Thanks so much for having me, and good luck in November.
I appreciate it.